Rob's the chairman and chief owner of McEwen Mining, but of course that's only his latest project. Rob's been associated with the gold industry his entire career, first 18 years of which were in the investment industry, and then since 1990 as CEO of multiple gold companies, most notably, of course, Goldcorp, where he took the company from market cap of $50 million to $8 billion. So well done, sir, on that. What you may not know, though, is that Rob is a very generous man, not the least of which because he takes a salary of $1 a year at McEwen Mining, which is slightly less than we pay our mining bankers. So I couldn't resist. Rob and his wife, though, are Cheryl. Rob and his wife Cheryl have donated $60 million to encourage excellence and innovation in healthcare and in education. He was awarded the Order of Canada in 2007, Queen Elizabeth's Diamond Jubilee Award in 2013, Mining Hall of Fame in 2017, Doctorate of Law from York and Western, member of the Dean's Advisory Board at Schulich, and a bunch of other accolades here, of which it would take probably the balance of the morning to go through. So, but very impressive resume, Rob, and we're proud and honored that you joined here. Thank you very much for taking the time to come and be part of this conference. And maybe with that, I'll pass it over to you.
Thank you very much, Kelsey, for that very generous intro. Good morning, ladies and gentlemen. My favorite investments are gold and gold shares, and perhaps they should be yours. The best way I've found to make money is to buy when the market is ignoring gold. Over the next several days, you're going to hear presentations from a market sector that's currently out of favor. So from my perspective, your timing is opportune. These companies, explorers and junior producers, fuel the growth of the industry, and some will become big winners. This industry is critical to providing materials to build technologies that we need to battle climate change, but also to succeed in the coming monetary climate change. Here's what I'm going to cover today: a personal introduction, times when it's advantageous to increase your portfolio, weightings of gold and silver, why and how I invest in the sector, my personal experience building a leading gold producer, and striving to do it again with McEwen Mining. My lifelong commitment to gold began when I was a teenager, at the dining room table, listening to my father explain why he was investing his and his clients' capital in gold. It was in the mid-60s, and gold was $35 an ounce. Okay. Sorry, I just had a slide problem. Had you bought gold then and held it, today your investment would have climbed by 50 times. And on a compound growth basis, it's quite competitive to many other sectors of the market. Gold is a unique asset class. It has, over the centuries, been used successfully to protect one's wealth when other asset classes are being destroyed. Today, we're facing a monumental threat, one that few people are talking about, and it's the monetary climate change that's being thrust on us by irresponsible governments who misallocate our tax dollars and are rapidly debasing our currency. Lenin, the founder of the Russian Communist Party, believed that in order to destroy the bourgeoisie, one would have to wreak havoc on the monetary system. Alan Greenspan, a former chairman of the Federal Reserve, said, in the absence of the gold standard, there's no way to protect savings from the confiscation through inflation. This year marks the 50th anniversary of when President Nixon severed the link between the dollar, the reserve currency of the world, and gold. This event has allowed central banks to create money without restrictions. After hibernating For many years, commodity prices have awakened. You can see from the Financial Times what's happened in the past year to various commodities. In such a market environment, tangible assets, such as commodities and precious metals, should form a solid base for your portfolio. Relative to financial assets, these assets are at a historic low. As you know, the timing of when you make your investment is critical to your investment performance. I believe right now is a time for you to start building your exposure to gold, silver, and copper. We are in the early stages of a precious metal cycle. On this chart, you can see that line in a bright red near the bottom relative to the other 6 cycles that have occurred since 1942. I see the price of these metals going much higher. In addition, the demand for copper is going to intensify as citizens around the globe demand a greener world. Throughout history, there are notable periods of financial euphoria where it seems that you don't have to work for money to make money. Simply buy whatever is popular, and tomorrow it's worth more. Today, we are certainly in one of those feel-good times. However, what is happening today is very, very different than what has happened in the past. Because this time, it's happening on an unprecedented global scale. In the past, these events were isolated in a specific country or economic region. But today, governments around the world have created a tidal wave of liquidity, which has fueled the inflation of asset values, stocks, real estate, collectibles, etc. Asset speculation is raging around the world. They have kept interest rates low. They are aggressively expanding the money supply and debt. They are taking on debt like there's no tomorrow. And corporations and consumers are all joining in. Another critical difference is the presence of the social media and the instantaneous dissemination of information and misinformation, which didn't exist in the past. As a result, the internet has lowered the barriers to entry for getting caught up in crowd psychology. A gentleman well-versed in the periods of market euphoria many years ago gave this warning to his clients that I believe is very applicable today. Neither wealth nor education would protect you from the madness of crowds. History has vivid examples of the madness of crowds, speculative bubbles, and the destruction when they burst, like the South Sea Company, the Mississippi Company, the railroad bubble that took place in the 18th and 19th centuries. The 1920s run up to the Great Depression and the massive bubble. Japan in the 1980s was arguably one of the greatest financial assets bubbles. The dot-com bubble of the late 90s is up there as well. The subprime real estate madness morphed into a full-fledged global credit bubble. Oops. With this history, it would be foolish to assume manias can ever be eradicated. It's in our nature. Mankind has a tendency to go overboard and take things to the extremes. We can't help ourselves, especially when it comes to new and exciting technologies or financial securities. Modern examples could be WeWork, Tesla, Bitcoin, Dogecoin. Several years after the financial crash of 2008, There have been warnings every year of an impending panic, but the stock market has kept climbing. Now, the question we all should be thinking about is, are we in a bubble? If so, when do you think it'll end? And most importantly, what steps should one take to protect one's wealth? Since I don't know your investment objectives or risk tolerance, I will tell you about my experiences, how I've invested, and perhaps these insights will be helpful to you. I am not, by definition, a prudent investor. I am heavily invested in gold. Over 80% of my portfolio is invested in gold bullion, bars stored in very secure vaults. This is a few years earlier, and shares of exploration and junior mining companies. The first 18 years of my working life were spent in the investment industry, doing research, sales, fund management, focused on gold. During this period, I met a number of very successful mining investors. And it was their continuing success over the years of identifying discoveries that reinforced my belief that there will be many more discoveries made. And it was their success which encouraged me to jump into the gold mining industry to see if I could also achieve the financial independence they enjoyed. In 1989, I took a closed-end fund trading at a 50% discount to its net asset value and jumped into a contested takeover battle. I won and took control of 2 mining companies. At the time, large gold companies were trading at 2 to 3 times NAV, and I believed that by merging the investment company with the 2 miners, my shareholders had a good shot at getting a 4 to 6 times lift in value. This strategy took longer than I thought to execute. It had lots of drama, but in the end, the results were spectacular, delivering 13 years of compound growth of over 31%. A key to this story was an old mine that investors were ignoring. It was high cost, had a short mine life, and a history of troubled labor relations. I looked at it differently. I saw opportunity that I believed would be unlocked with exploration. I saw a mine with a history of high-grade gold located adjacent to a very profitable high-grade gold mine. I saw a mine where its management had stopped exploring many years ago, that didn't believe the mine had much of a future, and they were submissive to a union. 1 year after taking control of the mining companies, I stepped in as the CEO, remade the boards of directors, and hired a new management team. Over the next 7 years, I completed a series of mergers to create Goldcorp. Over time, my biggest critics became my largest shareholders. The exploration I believed in found a treasure trove 1 mile below the surface. We tore down the old processing plant and pushed this 50-year-old mine into the 21st century. And our gold production soared to from 50,000 ounces a year to 500,000 ounces a year. And our cash costs fell from $360 an ounce to $60 an ounce. In the fall of 2004, after 19 years as CEO, I told the market that I planned to leave Goldcorp. The company was in great shape. It had no debt. It had $400 million in cash and gold bullion, paying a monthly dividend, and was one of the lowest cost gold producers in the world. I was Goldcorp's largest non-institutional shareholder. And before leaving, I wanted to complete one last acquisition that I believed would create significant additional value and propel our share price higher. and it certainly did. I believed it would be a very strategic value-creating opportunity. We bought Wheaton River. It was trading at a significant discount to our NAV. I decided to pitch their CEO a deal. It went like this. We'll take you over for a small premium to market. I'll step down as the CEO, and you and your team will run the combined company. Without hesitation, they accepted my offer. Through this takeover, Goldcorp doubled its annual production to 1.3 million ounces a year, while remaining one of the world's lowest cost gold producers. It performed well for its shareholders. I can say with pride, we did extremely well for our shareholders, and we certainly far surpassed the lift of 4 to 6 times that I thought we would achieve when I jumped into the gold mining industry. During my time, I watched our share price run on a post-multiple split basis from under 80 cents to over $40 per share. After Goldcorp, I continued investing in explorers and junior mining companies whenever this sector was ignored. I bought anywhere from 10 to 30% interest in a number of companies. And although I chose not to become a director of any of these companies, I did suggest strategies to their management that I felt would increase their market value. To highlight why I kept investing in this sector, let's look at the performance of 4 of my better investments and of 2 that I'm still working on. All are explorers moving into production, or junior producers, with one exception, a royalty company. They are Rubicon Minerals, Great Bear Resources, Newfound Gold, Abitibi Royalties, McEwen Mining, and McEwen Copper. Rubicon Minerals definitely rang the bell. Management asked me to make an investment. I owned a property very close to Goldcorp's famous Red Lake mine. I owned, they owned. And several years earlier, I tried to buy it for Goldcorp. I liked the property. I thought it had the potential, and I liked their management. They were good geologists. I suggested they purchase for shares a very large property package that I had assembled in Alaska to give them broader appeal and list on the MX. The cost of my investment was $11 million. 3 years later, I was sitting on a very big realized gain, up 16 times. So I decided to sell. Since I was an insider, I announced my intention to sell to the market and waited the required number of days, then sold at a discount to the market. Proceeds were impressive, $186 million. But it looked like I left a lot of money on the table, because after my sale, the share price increased by more than 50%. And for the better part of a year, traded above my sale price. As I said at the start, a good time to buy the sector is when it's being ignored. However, I have one caveat. If it is a junior producer looking to look carefully to determine if it's building a mine. Frequently, new builds present unpleasant surprises. I know from recent experience, and that is what happened to Rubicon. On this graph, you can see the times to buy. Early stage of discovery in the oval, and after they've gone, they've built, and we've seen that the mine works as the stock is going up. Great Bear Resources and Newfound Gold are explorers. When I invested in these companies 3 to 4 years ago, the market was again ignoring the sector. Trying to get investors' attention was like pushing a string. I want to emphasize that there are a good number of exploration stories that have also delivered attractive returns over this same period. Great Bear has had a has had spectacular success exploring in Red Lake, Ontario. But I found it amazing because this is an area that had already experienced 3 gold rushes over the last 100 years. And this discovery was happening less than 15 miles from Goldcorp's famous Red Lake mine. I invested $6 million at $1.55 because their assay results looked a lot like the early results we had at Red Lake. In addition, they had a different interpretation of the geology that, if true, meant this deposit could be very big. Today, the stock is trading at 16.30, or Friday, it was trading at 16.30. Newfound Gold was run by a geologist who I had already invested with in another company where he and his team were utilizing artificial intelligence to explore. I respected him and his team's skill set. Newfound Gold is exploring in Newfoundland along a major crustal fault. There were a few interesting historic high-grade drill results, and their limited recent drilling was suggesting there could be more. I was intrigued by long intercepts of high-grade, near surface, and its location close to roads, power, community. I thought if they could find a deposit, its development would likely be low capex and quite profitable. I started investing at 40 cents, and today it's trading at 6.80. Abitibi royalties, I don't have a chart of it, but you'll see why it's interesting. I bought it because it was run by a former employee of mine, Ian Ball, who I hired right out of school to join Goldcorp, and he progressed through McEwen Mining to president. He then stepped out on his own to become CEO of Abitibi Royalties in 2014, and the company was trading at 50 cents a share. It's currently trading at $27 a share and has been recently taken over by Gold Royalty Corp. Another company that I bought shortly after leaving Goldcorp was US Gold, an exploration company with property in Nevada next to one of Barrick's largest gold mines. It had a small market cap, traded over the counter in the US. I bought a third of the company, stepped in as CEO, installed a new board of directors, hired a president, raised some money for exploration, listed it on the TSX and the Amex, and then bought 3 companies to significantly expand our holdings in the prolific Battle Mountain trend. The stock took off like a rocket. I entered at 36 cents, and 7 months later, it was trading at just under $10. Since then, it's been a roller coaster. Down to 50 cents, up to $9, down again to 50 cents, up to $5, and down again. Throughout this period, I kept buying to increase my financial commitment. In January 2012, US Gold merged with another company that I controlled, Minera Andes, to form McEwen Mining. Today, we have mines in 3 prolific gold districts across the Americas. In Timmins, our Fox Complex is on a geological trend that the locals call the Golden Highway. In Nevada, our Gold Bar mine is on the Battle Mountain trend, just south of one of Nevada Gold's, formerly Barrick's, largest gold mines. And in southern Argentina, we have a 49% interest in the San Jose mine, which has some of the richest silver and gold ores in the Americas. All of these grounds, all of these areas are fertile grounds for exploration. McEwen Mining also owns a very large copper project, Los Azules, that I believe represents significant value, but is not reflected in our stock price. And I'll speak about it shortly. Attempting to repeat my success at Goldcorp is a tall order, but this is an industry where exploration and opportunity abounds, and my track record has been good picking winners. I'm impatient and at times intolerant of individuals who are inflexible, adhere to past practices, and lack the ability to anticipate. At Goldcorp, I went through 3 heads of operations before finding one that understood that mining was more than just drilling, blasting, and moving rock. I'm also tenacious. We endured a 46-month-long labor strike, and I got a death threat out of it. We held out, and the local chapter of the United Steelworkers Union decertified and left us union-free after being there for 40 years. So where are we now? With the operational challenges we faced in 2020 resolved, McEwen Mining is once again going in the right direction. In our last 2 quarters, we delivered on guidance, reporting increased gold production and falling cost per ounce. We are 2/3 the way through Q4, and everything is looking good. Our recovery has been driven by the talent, experience, and focus of our new senior management team. We have spent aggressively on exploration in Timmins, and the success we have achieved will soon be apparent when we issue our expansion plans for our Fox complex later this month. More production, longer mine life. This represents a huge step forward. We are also working on surfacing the value of our Los Azules copper project. I believe this project has immense potential to create significant value for McEwen Mining as we advance it from its present preliminary economic stage onto a pre-feasibility stage. It is now in a subsidiary called McEwen Copper, which we plan to take public in 12 months. But right now, we're in the midst of a private financing to raise 60 to 80 million, with already 40 of that in the bank. These funds have allowed us to get a quick start in September on advancing to the pre-feasibility stage and to begin construction on a new road that will provide year-round access. And very importantly, we have assembled a strong team of experienced copper professionals to push this project forward. Of the funds already raised, I wrote a personal check for $40 million US, and I've been joined by a number of other investors who recognize the appeal. So what makes McEwen Copper an intriguing investment? McEwen Copper owns 100% of Los Azules, one of the world's largest undeveloped copper projects, not owned by a major. I expect the impact of the work funded by this private funding will be powerful. The value proposition is quite similar to a real estate model, where the value increases when advancing through the stages from a raw piece of land, then getting it rezoned, then obtaining building permits, then building. Value increases at every step along the way. In this, sorry, I had a little technical problem. Okay. In this financing, the pre-money value of Los Azules is 175 million US, which is equivalent to 0.6 of a cent per pound. As we reach the preliminary feasibility stage at Los Azules, we expect the value to increase significantly. This chart shows 2 examples. Why is that chart not showing 2 examples? 2 examples of 12 large copper projects sold, and these 2 samples are copper projects that were at the pre-feasibility stage and sold for over 13 and 15 cents a pound. You can see the prices paid on the right-hand margin of this chart. And of these 12 large copper deposits purchased between 2010 and 18, only 2 were at the PFS stage. And you can see advancing from the top, going down from resource to preliminary economic assessment, where we are at Los Azules, to pre-feasibility and on to feasibility. Curiously, it looks like the most valuable value is to be realized in the near term at the pre-feasibility stage. So, Los Azules has indicated and inferred resources totaling 32.89 billion pounds of copper equivalent. Given the size of Los Azules, it has huge leverage to the price of copper, and a change of a few cents creates dramatic swings in value. When we reach the PFS stage, I expect that Los Azules value will be at a minimum of 3 cents a share and possibly as much as 5 cents. 5 cents per equivalent pound. Sorry, that's 3 cents and 5 cents of equivalent pound. At these prices, the value of Los Azules would have increased from $175 million today to approximately 1 billion to 1.6 billion, respectively. To put that in context, assuming a fully subscribed private placement, McEwen Mining's 69% interest would be worth 1.5 to 2 times McEwen Mining's current market capitalization. So to conclude, I have a large financial commitment and a very strong belief that the best is yet to come. The cost of my investment in McEwen Mining is $165 million. And with my recent investment in McEwen Copper, takes my investment over $200 million US dollars. As CEO, my salary is $1 a year. So I'm not in it for the pay. I'm in it for the capital gains. The massive monetary stimulation we're seeing today is without precedent in world history. The debasement of currencies is assured. Prepare for it by buying tangible assets, particularly gold, silver, copper. Mining is a cyclical industry, so be prepared to take profits off the table. The market will deliver times when you can re-enter to re-establish a position. Gold is a global currency. It remains the bedrock of central bank reserves, and they continue to buy it. When selecting an explorer or junior producer, be alert to new stories in old mining districts and to new technologies that will speed exploration and improve recoveries. Avoid producers that sell royalties or streams as they are selling their future profits and hurting their future share price. Lastly, and very important, if you want gold exposure, our hosts at Laurentian Bank are very able to assist you. And one more word, and this is important to appreciate. Mining has been and continues to be good for Canada. And miners have been very generous, contributing in a significant way to improving the health, education, and well-being of Canadians. All you have to do is drive up the main avenues of our cities, around our university campuses, to see their positive effect. Thank you. Back to you, Kelsey.
Well, I'm sorry to disappoint you, Rob. It's Mark here, but I definitely wanted to say thank you from the bottom of our hearts. What a remarkable share, sir. We've been, pardon me, blessed in this series of conferences with what I would call royalty in the gold mining space, and it's once again repeated with your presence here. You're a fantastic storyteller. I heard texture and context and color about the gold mining industry. I want to say thank you for that, because it's a great opportunity for our investors to hear right from the source. So I would like to circle back, Rob, and ask a couple of questions about your presentation, if I may.
Sure.
Before we wind down, because we're approaching the top of the hour for our first featured company. But a great opportunity here. In our last VID session, we had the great pleasure of welcoming Pierre Lassonde as one of our keynote speakers. And I feel a similar energy with your offering today. And I feel I'd be a little remiss if I didn't ask a couple of pointers from your perspective for our investing community. And so I'll start with this, Rob, which is if you were to provide, say, a top 3 points of criteria for investing in gold, could I ask your wisdom and advice for that for our investors, please?
Well, I think, Mark, I covered a lot of that. I mean, governments are irresponsible. So from a gold standpoint, I think there's not a lot more to say. That it's timing, but throughout history, governments have debased currencies. And this period we're in right now is without precedent. I think there's a lot of room. I think gold's going much higher, certainly higher than $5,000 an ounce as we go through this cycle. And at certain times, gold performs better than gold shares. I can think back to Black Friday back in October of '87. The gold market went south, the stock market went south. For 2 days, gold stocks were going up with gold, and then they went south because of their equities. But gold continued running for 6 months, and then the market started to realize that the gold producers are going to make a lot of money, and they piled into gold shares. So there's times like that. And I truly believe there are periods, and we've seen, I mean, gold cratered starting at the beginning of 2012, bottomed in 2015. We had a run in the latter part of 15 into 16, and then it gave up a bit, and then it started again in 17. So there are times you can enter it. And I just say it's a very, I think about 0.5% of the market is in gold right now. So it's definitely ignored, but it shouldn't be.
Great potential, great potential. Absolutely. I'd love to ask your perspective as well, Rob, on the cut of the cloth or the caliber of character in those that invest in the gold mining industry, because some people understand at a very high level, others are coming into the market and they're newer to investing in gold. Let's talk about the concept of what we would call holding space or managing the moments of anxiety, because obviously investing is a long-term game. There's key moments that the short game comes into play. I understand that, but what advice would you have for investors that you hit that wall and you're ready to pull the trigger? You're not sure if it's the right time, but how does one manage that energy of just that little bit of anxiety to say, is this the time to get out? But also keeping in mind the long game. Any thoughts there, Rob?
I suppose I'm guided by advice of my grandfather, who said, "You don't go broke taking a profit."
Fair advice.
You look at it, and if someone wants to enter this space and they haven't been in it before, there's a multitude of products that your advisors could share with them. If you wanted a dividend, you buy the seniors right now. If you want a portfolio where you don't have to worry about anything, about governments, about HR strikes, and that, you buy some royalties. If you want a little more excitement, you go into the junior space and the explorers. It's best to have a number of them in your portfolio, because not all of them are going to be winners. And 1 or 2 will be giants. For me, in most of my investments, the size of my do a lot of private placements, so they're somewhat earlier, and the size of my investment means I'm usually locked up, so I can't move too quickly.
Understood. Well, thank you for that. And just if we could step back into what I like to call the bird's eye view, Rob, in the timeline. Obviously, the industry has been through a lot of ups and downs as the nature of the business. The universe has given us at this time on the whole planet through COVID and pandemic restrictions, every industry on the planet has been affected by what's happening currently. I know that we've come through many moments of the pandemic, but just where we are right now on the timeline, what would you say is the most exciting potential as we're coming through this pandemic? Restrictions have, depending on the region in the world, differed from place to place. Just coming out of this heated portion of the pandemic, what's the energy like in the gold mining industry based on what's happened on the planet?
You're still seeing enormous enthusiasm for the tech sector. And people haven't looked over to gold, but I'd be looking in areas. I think the Golden Triangle in BC has some interesting stories. I mean, there's the gold stocks have corrected, and they're still far underperforming bullion. So I don't think you have to be. I mean, we could see some weakness in the near term. We're moving into a tax loss selling period, but on a seasonality basis, gold is usually strong in the new year. So I think now we're moving into a period where you could start making an investment. Maybe not put all your money in at once, but I'd say start walking in that direction.
Well said. I want to thank you, Rob. Honestly, one of the most colorful and full of texture presentations we've had in this space on our VID conference series. So I know you bring a great deal of wisdom and experience. So on behalf of the whole team here and Laurentian Bank Securities, to say thank you for starting us off in a great tone and a great voice to move us into a 3-day conference, Rob. So I'll say thank you for your time and wish you all the best.
Thank you very much, Mark.